Hello, everyone. Welcome to the Human Performance Lab. My name is Tony, and I do apologize I have not been streaming the last few days. Friday, I was just not feeling well, and I'm working on some things for everybody. I don't want to talk about it too much right now, but I do have ideas. I'm actively working on things. This morning, I just recorded, I don't know, plethora of videos um, for education, just different things along those lines. But I've had a recurring question that keeps coming up. And it's Tony, can you create a training video, a teaching video that just goes into how you create your pre-market analysis, your plan for the day? So that's what I'm going to be doing in the beginning of this video. And then I'll come back over to chat. I'll come back over to questions, different things along those lines, and we'll go from there. But I really want to get into what it is that I'm actually doing when it comes to building my plan. And I want to get very, very specific in that as well. So without further ado, we're going to change what we're showing on TikTok real quick. And then we're just going to bring everything over. So hopefully that's enough now. No, it's not. Interesting. I don't know if I can get that information over here on TikTok or not. Let's see here. That's as far as the screen is going to show. Okay, so I'm still going to have to bring things over then. So let me go ahead and bring this back to here. Way too large. Let me get this so it can be seen better for everybody over here on TikTok. I just adjusted it and messed it all up, trying to extend it for what it is that I'm going to be doing this morning on the live. Hello, Sean. Welcome. Somebody else joined TikTok too, and I missed the name because I'm trying to get your guys' screen set up so you can easily follow me in what I am doing this morning. So what I'm going to do is I'm doing a class actually on how I build my pre-market analysis. I've had a lot of individuals ask me about this and want me to do just a video on it. And so that's what I'm going to do this morning. So this is my short-term chart for the footprints. I'm trying to bring that back again for everybody on TikTok so it's easy to see when I start doing the let's see. That looks better. Okay, there we go. So we're going to run with this for TikTok. And then we're going to get into the actual purpose of the video itself. All right. Mighty Mouse, welcome. Welcome. Prath, hello. I hope everybody is having a great Sunday, a great weekend, and joining some time with family and stuff. If you're on the East Coast of the US or Canada, hope you are all staying indoors and safe. All right, so what we're going to do here is we're just going to be running the pre-market analysis, how I set up my areas, how I do everything that I do in terms of setting myself up for the trading day itself, okay? And we're just gonna go ahead and use the information from Friday, moving into what we'd be looking at for this next day's session. And so we're gonna start here with this chart, and this is why I haven't done this yet, because I have to change everything around in order to be able to do this, because this chart has to be here for TikTok. And then this chart, my image is blocking this. And I need this too. Interesting. Okay, we're going to do this. Hello, Scarlett. Thank you for joining. Appreciate you. I'm just trying to move things around a little bit so everybody can see my charts as I go through and teach everybody how I do my pre-market analysis for let's move this over here, and then let's move the camera over here so everybody can see me, but you can still see the chart here and you can still see the chart here. Beautiful. Okay, pre-market analysis. This is what I do first, okay? This is setting everything up just as I would coming into a brand new session. So I could do this, you know, if I was trading the Asian session, I could start doing this at like 6 p.m. on New York time on Sunday night. If this was the US session, I could do this at 8:30 a.m. on New York time on Monday morning. So anytime about an hour before you're looking at starting to trade, you would start this process if this was a process that you were utilizing for auction market theory. Now, what you're not going to get here is how to trade it. We're going to get into that at the live edge of the markets, okay? What we're doing here is we're just teaching how to set up areas based upon auction market theory, areas where you might be interested in looking for entries and entry requirements around these areas based upon auction market theory. That's the whole point of this. So let's get into it. The first thing that we want to do is we want to make sure that all we have is 2 bars on our profile chart. So what is this profile chart? This profile chart that you're looking at here is the daily profile chart that includes the Asia, the London, and the US sessions, all 3 of them, okay? And so what we want to do is we want to take a look at this chart and we want to say, okay, what kind of market condition are we currently trading in? Are we trading in a range? Are we trading balanced? Are we trading an imbalanced market trend? Okay. And we can look and say, okay, on Friday, we broke the low, but we didn't close below there. We didn't do anything else. We extended the range to the downside on the daily profile. And what does that mean? Just that. We extended the range lower. We rejected off of those lows. And so my question for you is, if we're running a trending market condition, are we going to reject off of lows, or are we going to continue to break the lows? Well, in the case that we're looking at right now, market came down, rejected off of the lows, didn't close below, didn't accept below the lows. Jerry, thank you so much for the like and the following. I really do appreciate you. We broke the lows. We're not trending lower. We're not showing any indication that we're actually accepting prices to the lower side. We're rejecting the lows. And what happens when we reject the lows? Well, guess what? We're not trending. So we're still in balance. So what we want to do is we want to take every single one of these profiles that are outside of this current range, and we want to bring them into the range of the current profile. And this was started basically on June 2nd when we stopped trending. And what we want to make sure we do is we want to leave out, oops, I hit a merge. I want merge. We want to leave out 2 sessions. First, Friday's session. Why? That's our static. It's our static area that we can utilize looking for positions. Okay. We don't want to include it in here. Why don't we want to include it? Because by including that, finally, a trading using volume profile analysis, with that teaches, yeah, absolutely. Darius, that's all I do. I just use auction market theory, and I just use footprints for my entries. So there's the footprints here that I utilize. I do other things as well. I'm working on how to teach all of those concepts together. What you're not going to get here is all the jargon that you'll get from markets and profile or some of the other teachings out there, right? I'm actually taking auction market theory and trying to break it down for you guys so you can come in and learn how to do these processes for yourself. Okay. Not to say, hey, look, here's a trading strategy, right? That's like giving somebody LeBron James ball and saying, hey, you have LeBron James ball. Now you can go play basketball like him. Darius, thank you. I appreciate it. Thank you for the love and the support. Much, much, much appreciated. Thank you. This is about how do we develop the skills that LeBron James has on the court. Okay. Those skills are his own. Nobody gave him those skills. He had coaches, he had other people helping him, master some of those things, but it's his work and his dedication, his desire to come in, his intention to become great at what he does. You can say this about Messi. You can say this about all of this other stuff. It looks complex, but Beck, it does when you're first looking into it. But you know what, though? Everything looks complex when you first start. If you're starting something new, it's going to look complex because you've never seen it before. Is this like a moving average crossover methodology? Absolutely not. It's not that simple. But we break the processes down to make them that simple. Okay? So just stick around for a little bit. Wait for the next 15, 20 minutes to transpire, and then come back and tell me if you still think it's really complex, or, if you can see how it's connected. Okay? Let's start from there and ask questions as I go on. That's why I'm doing this live, so you guys can ask questions, okay? So you can make this as your own. So you're not just saying, hey, some guy on TikTok or the internet streaming saying, hey, this trade like this. No, trade, you can only trade your perception. Trade what you see in the charts, okay? So let's get into it. How do we do it? What we want to do is we want to look for the markets, and we want to see it as an auction. Okay. And what does an auction need? An auction needs participants. In this case, this auction that we're seeing on the charts needs traders. Traders are the participants. Okay. That's how we're going to look at this. The markets aren't something to just be there and just price. It's participants. Price is the result of the actions of the participants. Order flow, volume, that's the actions that were taken. So the results is price. The action taken is seen through volume. So what we're analyzing here is the actions that the participants took. And then we're going to analyze the result of those actions by analyzing price. And when you bring the two together, you watch the participants. It's like breadcrumbs, right? Somebody leaves breadcrumbs on a trail, okay? The trail is telling you which direction to go in. You're just walking down the trail, right? The breadcrumbs let you know if you're on the right path or not, if you're in the right direction. And if you can bring those two things together, guess what? Something magical starts to happen. You start to understand what price is doing rather than explaining it away in a story. And it starts sounding something like this. Price broke a low. We rejected that low. Price is moving back into balance. That's the auction, and the participants rejected that low. Here's a story. Price action broke a low. They hunted my stops. They stopped me out, and I couldn't get back into the position. That's a story, okay? We don't want to trade stories. We want to trade breadcrumbs. We want to see the participants. We want to see the result of price. And we want to put it together to create our own story, not one that we've heard other people talk about, ones that we can actually see, that we can actually understand, that we can actually build a process around to utilize that information to move into our intention. And if you're here right now listening to this, your intention in some way, somehow, is right here in this moment. You want to become profitable in trading. You want to be able to take profits out of the markets. Maybe you have a different intention than that, but it's going to be surrounded around that in some way. Well, let's bring that intention into the present moment, and let's learn how to presently read the markets in a way that we're going to be able to align our actions to our intention in real time. You're absolutely right, Darius, in real time, because that's the only thing that matters, is right here in the present moment, because the present moment is real time. If you're using time-based indicators are based in the past. They're all ran off the past. You're adding time into the present moment, and you just created the present moment where there's a lag in it now. If you hesitate in your entries, you are the same thing as time. You're creating that hesitation in the present moment. You're creating that lag. Let us be the lag that we need to manage, not the lag created by indicators. Do I trade AMT and do you use a TPO chart? 10. So first, I don't use a TPO chart, and this is why. Because volume profile can give me all the information that I need, and I don't need to go into over analysis of a TPO chart. Okay, time price opportunity based upon volume or based upon price is still looking at the same thing. But price is the result of participants. The participants is the action of volume, what the participants actually did in the market. And we're not talking about individuals that are running off of SIM or running off of these evaluations through prop firms that are all based off of SIM, right? Those aren't market participants, because your orders are not going to the actual auction, okay? Your orders are being done offset from that. So we don't even see those players. We want to know the participants. That's why I don't use TPO charts, because TPO, time price opportunity, right? This is good knowledge. Thank you, Ten. I truly appreciate that. But that's why I don't use TPO charts, because this has given me the chance to see the participants and the volume. Then we're going to go back and analyze price, and we're going to bring it all together into one big package. Okay? So price action broke a low does not mean that we're trending lower. It doesn't mean we're going to trend lower. What it means is we rejected the lows, and that the rejection is going to be true unless we come back and break the lows again. All right? So get this out of your mind of we're trending right now, because we're not. And the reason why I mention that is because individuals will want to take a short off of this low and anticipating a breakdown and continuation of a trend that doesn't even exist in the first place. All right? Be careful of that. Be careful of trying to call and tell be careful of you telling the market what it's going to do. That's the phrase I'm looking for. Be careful of that. Why? Because the market doesn't care what we think as individuals or what we think the market's going to do. The market cares about what the participants are doing. That's the key. That's what the market cares about. That's the only thing the market cares about, is what the participants are doing. And then it provides price as a result to those participants. So now, how do we start building our first areas? Well, we need to understand how an auction works in the first place. The majority of the auction is done in an area that we call value. And value is between 2 points, value area low, value area high. And what happens is the majority of volume of participants act within the area that we call value area, okay? And then participants, to create that value area, they reject prices outside of that value. Now, sometimes that rejection creates its own area of volume. And when it does that, what happens? Eventually, this value area will shift higher and will include some of this volume that's there. But until that happens, these are still considered unfair highs and lows. What does that mean? That means that most individuals in the auction are participating in here. If you want to understand the idea of, and I hate this term, but I'm going to use it anyhow because most people relate to it some way, smart money. Smart money is not engaging in trades where most of the participants are. Think about a regular auction. Think about the easiest auction to think of as a car, okay? A car sells, let's say, for $20,000 on the market, okay? $20,000 vehicle. Well, let's even use these prices here. 29,700, 30,000, 29,400, right? Most individuals are going to be willing to purchase that vehicle at $29,700. Well, if you know that, and that's the price of the vehicle you're looking at an auction, you're going to want to buy it at a lower price so you can sell it at a higher price. Well, most individuals buying it in the auction aren't going to think that they're going to get $30,400, $30,500 for this vehicle. There's only a certain amount of idiots out there in the world that are going to pay for something at a much higher price than what it's actually valued at. And I don't call them idiots to say, hey, look, they're dumb, or to be discouraging toward them as an individual. But there are people out there that are not as money conscious as others. But if you're a money conscious individual and you're buying something, you're going to want to buy it at the price where it's actually valued. Bought into the SMC style for a while. I'm not even sure what the SMC is. So guys, just a little bit of background for me. I took my first trade in 1998. Okay. First trade in the market's 1998. We can get into that story later on if you want to, but I don't think it's necessary for this particular example. I retired from trading, full-time trading. I started in 2008 full-time. I retired in 2019. And I haven't been back into the markets again until April of this year. Had a divorce, completely messed me up emotionally. I was done, out of the game. You see now you're starting VPA. It's a different way of viewing everything. So if we go back to the car example, 29,700, okay, is the average price of the car. Well, average sold, right? So if you're wanting to sell the vehicle at 29,700, if you try to buy it at 30,500, 30,600, 30,700 in this range, what's going to happen? You're going to sell it down here, buy it up here. You're taking a loss. Okay? If you buy it down here, let's say at 26,800, there's a full $1,000 room of profit for you. If you buy it down here at 29,100, there's only 600. It's an auction. The way that auctions work is the same exact way that we should be dealing with the market, because the market is nothing but an auction. So the idea is to buy low, sell high. But we don't do that in terms of indicators of price. We do that in terms of volume and the participants. Where have the participants been buying low? Where have they been selling high? Okay. Well, if we get into the market in these areas, what causes volume to increase at particular price? Time. The amount of time price traded in an area where participants were going back and forth with one another. So we don't want to get in at the highest areas of time. We want to get in at the areas where the amount of time was lowest. Here. Unfair lows, low volume areas. Those are our keys. We buy into the market or sell into the market in those areas. One, we're not expecting price to spend a lot of time in these areas. And if price doesn't spend a lot of time in the areas, what should we expect? Rejection. If price is staying in an area for a long time, what should we expect? Rotation. Rotation in a tight range is what some traders will call congestion, chop. And you talk to most traders, they lose money in chop. Wasted Ed, thank you so much for the follow. I appreciate you. They're in that context of chop, they're trying to buy in or sell into this area, and the chop continuously stops them out because they're getting in at the price where most people want to be in at. Well, most people lose money. So most people is not who you want to follow. You want to follow the individuals that understand how an auction works, and you want to participate where they are participating. And what happens when price action comes into unfair highs? Well, eventually it cycles back through, trades back into value, goes sideways a little bit in value, moves back to the other side of value. And what does it do when it comes into the other side of value? It works itself back up to the other side of value. And so if you want to do trades that are longer term, intraday trade where you're holding on for some time, turn that into a swing trade, turn that into a position trade, what you want to do is get into these areas in shorter time frame charts and then hold for the areas that make sense in your longer term chart. And now you just took a short-term scalp per se, and you turned it into a long-term position holding. It's maintaining market auction dynamics of understanding it's in a range and not looking for a trend to develop in a market that's no longer trading in a trend, because we're trading in rotation, in value. How do you think these high volume areas are made? Price action makes them like this. Where is the majority of your volume being traded at in this area? Oh, shoot. I picked the wrong one. Sorry, guys. Hold on a second. There we go. I can't draw one on here. But if you look at your low volume areas and your ranges, right, the majority of volume traded in this area. So you can just take the line and put it in here. And you can take another line and you can put it down here. And you can say in this area, 70% of most volume traded in this area. Here's your unfair lows. Here's your unfair highs. To move back into the trend, we want to buy someplace below this line, anticipating the trend to continue. But if you're in rotation like you are right now, you're not expecting a breakout of a trend. You're expecting continued rotation. So take your profits and move back to the other side. Take your profits, move back to the other side until you get a breakout that confirms trend continuation. And when you have trend continuation, you adjust the way that you're trading, no longer trading in value, trading with the anticipation of a trend continuing by still buying unfair lows into the trend, but no longer trying to sell the highs. Why? Because now you're in a trending market condition until you're not. Again, price is the result. It's the path. It gives you a sense of direction. The breadcrumbs is volume. It's the participants. It tells you where to be directionally. Are there any questions about that? And so what we want to do in picking areas is we just want to pick the areas of unfair highs and unfair lows. It's really that simple. If it's gray and it's not in the orange, these are the areas that you want to be long. And then if it turns around and stays in this range here, there's your sellers. There you go. Now you know where your sellers are, and now you know where your buyers are from this particular perspective. But this perspective alone isn't going to tell you anything other than what the daily chart's doing. Well, nobody trades off the daily charts. So what we want to do is bring it down into a lower time frame. And a lower time frame is another daily chart, but just the US session. Now we're breaking things out in the context of the US session, and we're breaking them out in the context of all sessions, but still maintaining the high daily area. Now those areas are down here. It's the same areas, it's the same lines, it's the same everything. What is this telling us? Unfair lows are down in here. You can even see this low volume node in here, right? Attractive area possibly to buy. But then what do we have? We have price here, which is another area of unfair highs or unfair lows that we put into this area here, right? But notice something. It's in value. So what would we be anticipating if price action came into this area? Rotation. Now, why is that important? Because this is at 693. This is at 792, or 893, 893 and 792. Almost 100 points of a range. If we can identify that range, anticipate the range to continue, that's an area of consolidation or chop wide enough to trade around. But we don't try to buy up here on a breakout. We want to short this area and go long down here and trade the rotation until it breaks out, then look for a continuation to the upside. Now we have areas we can mark in and say, okay, we're looking for possibility of rejection. We're looking for a possibility of rotation. The rotation area is wide enough to be able to trade. We're going to look for unfair lows and unfair highs in that area to trade the rotation if it gets in there. We're going to trade the breakout if it happens. And now we have this little area up here, unfair highs, unfair lows. What is this telling us? That at one point in time, buyers were holding this area of rejection and moving price higher. Then sellers came in, used this area of rejection, and brought price action lower. What do we probably not want to do in this area? We probably do not want to really take a good look at this area and try to trade around it, because price action is telling us two different things at the same time. Now, this is a wide ranged area, right? So what do? We take this now and we bring it over here to our 30-minute time frame. Now, why is a 30-minute time frame important? It's just a longer time frame. It could be a 60-minute, it could be a 100-minute, it could be a 240-minute. Here's the point when it comes to these types of bars. Let's put a 4-hour chart. People like 4-hour charts. Why? I don't know, but they do. It's like something magical about a 4-hour chart. I don't know. I don't see it, but you believe it, therefore it must be partially true. What is this time frame telling us? It's telling us exactly the same information that this chart is telling us, except more price is able to be plotted on a 4-hour chart comparatively to the 30-minute chart. So in this context, because we've been trading in this range for so long, a 4-hour chart is a good time frame to use because you're able to see everything in one chart. All that time is a lens on a camera. What do you do with the lens of the camera? You change the focal point so you can get a far away landscape type picture or a close-up of another image. It's the same exact thing. It's still telling us the same exact stuff. So in this case, a 4-hour chart can be pretty easy to use because we can say, all right, in this area where we're trending higher, trading a value, broke out of that value, traded back into value again, broke back out, started to trend higher until we came back into this prior area of value. Where did the prior value area start? Here, when we first broke out of this prior consolidation period. This is a market shift. This is either going to move back into value like these highs did, or it's going to turn around and continue a trend condition, or it's going to run sideways for a while. This bar here is the most important bar on the chart. But if I'm scalping, should I be going at a higher as a 4-hour? You can, and I'm going to show you why in just a second, Darius, okay? Great question. I'm going to show you exactly how this all works out, all right? It's getting there. Now what we do is we say, okay, this is where we want to put our custom profile. The custom profile goes on this time frame. Not having a higher time frame for my 5 scalps is really bothering me. Absolutely. And this is exactly, Darius is exactly, we're going to break it all down. Okay. Now, as we know, these are the areas that we're interested in for unfair highs, unfair lows, right? From the higher time frame for the daily. Well, if we look in here, so we got some higher volume, but we have this low volume notch right down here off of value area low. Okay. Now we have this low volume range, which was into that context as well. And now we have this range here, which picks up these low volumes in here. What's the red? The red was the area that we saw in here, right? Let's go and see how price action has been behaving in the red. To do that, we're going to adjust this from a 4 hour since we already have our bigger picture, right? And we want to get a bit more granular now in our time frame. We want to get a little bit more focused in. How did price action trade around this little red area that we have said no trading, right? On a higher time frame. Rejection, 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 rejection. Trading in, near, and around areas. Okay? Stop thinking of it as long and short, as directional. Start looking at areas as we traded in, near, and around. We traded in, rejected. We traded in, we rejected. We traded near, we rejected. We traded near, we rejected. Doesn't sound like a market that's accepting prices in that area, right? It's rejecting. Price action, back into a range here, right? Rejected, rejected, rejected. Around the area, near the area. We broke through immediately. What happened? Notice this bar, traded right through. We didn't spend time here. We rejected our lower area. And price action moved higher. Through the area again. Came back, tested the area again, rejected, trading around the area, rejected, traded through, and continued back to value area high. Traded near, rejected, traded near, rejected, rejected in, didn't even make a higher high, and continued lower with your rejection, your rejection, your rejection, your rejection. This is no longer an area that we should have in red. This is an area that we should have in green. We want to trade around this area. Not around it as in it, off of it and off of it. And if price action goes into the middle of it, beautiful. Trade off of it, looking for an entry back out of this for the rejection to move higher. Does everybody understand that concept? So these are our areas for our long. Now, what do we want to do if the market turns around and starts trading lower? Let's go back to our 4 hour because it helps us be able to see everything in the chart at one in one area, right? Rude. So we can bring all of it into one. We couldn't do this on a 30-minute, be too scrunched, right? But look at your area down here. If the market breaks out of this area to the downside, it can just be rejection. Look what we did here. We broke out to the downside and we created rejection. Price action moved up. This is where people were on Friday looking for shorts. No, not until we get what? A close below the area. Now, close below an area, depending on what time frame you're actually trading off of. If you want a farther away close, developing time for the close to happen, you want to be farther away from it, like a 30-minute chart. If you are really close to the market, then maybe you want to be a little bit closer to it. How do you get closer to it? Put it on a 10-minute. And now you're looking for a close below your lows that made this. And so you can't even see the lows on this chart now on a 10-minute time frame. And so what do we want to do? Look and see where that close is, index it, and see what happens. But if you're noticing something here, every single time frame we've looked at They've all shown the same thing. Rejection. Not acceptance of lower prices, rejection of lower prices. Even here, you got your close, but the immediate reversal bar that happens afterwards. That's how you use multiple time frames. Not because somebody said to use this time frame, because you're looking at the time frames that are important to you as a trader. Not important to what somebody else says, important to you and the time frames that you're trading in. Because the only time frame that's showing that close from Friday's break of the low is the 5-minute chart. And if you're trading off of a 5-minute chart, I really hope that you're not using that chart also for your actual setups. Why? Because you want to be looking at the different information available to you, but you want to pick the ones that are related to your trading, to your time frame of entry. Time frame that's important to me and my strategy. Those marketers will never say it that clearly. Because, Darius, here's the thing. Your whole system only has importance because you say it has importance. But what do? We go to people that we say, okay, your system is important to you and it looks good. I'm going to take that system and say it's important to me too. But think about all the things it takes for us to be able to perceive information from our environment. The way I distort information coming to me is different than the way you distort and generalize information that's coming to you. What I think and what I see is not important to you because what you think and what you see is going to be different than me. Because we've learned to read price differently. So learn to read price. See, people say a professional, right? A professional they're a professional because of their profession. You know, they're a doctor, they're a professional. They're a top athlete. They're a professional, right? They're a surgeon. They're a professional. Okay, but then you turn around and you look at, an individual that's been a bricklayer, let's say, for 20 years, right? Absolutely a professional, right? They're a laborer. Okay, we look at and we judge other people's jobs and professions to define professionalism or not. Okay, but let's take a step back for a second. What actually makes a professional a professional? Is it the profession that they chose, the one that they were that maybe they were led into from very as very young children? Maybe it's something that they just found randomly. Hold on just a second. Maybe it's something they just walked into randomly that just, happened for them, right? But let's really look at the word professional. And to me, a professional is this. A professional is someone with an intention, and they line their actions to their intention. And what makes them a professional when they do that? Because having an intention, that's internally. That's your mind. That's your thoughts. That's all of that stuff. But your thoughts and your mind don't always dictate action. You have habits, you have routines, you have patterns, you have a predictive machine that people call the subconscious mind that acts for you. And if it's not aligned to your intention, you're left wanting your intention because you can't have your intention because it's your habits, it's your routines that create your actions for you. And when you fix that, to me, you become a professional. Because now it doesn't matter what your intention is in life. If you have learned the process of aligning your actions to intention, any intention you have in your life, you can use the same process for. And now you're a professional, not at a profession, at this game that we call life. And now you can win at this game that you call life because you have developed yourself the ability to align your actions to whatever it is that you want in life. That's the game we should be playing. That's the long game. Why do I use trading to demonstrate this? Because trading is one of the only things out there that give you feedback of immediate results. And we need those immediate results. Why? Because immediate results do one of two things. Either triggers the story to tell us why we did what we did, or we can use it to tell us, to give us the authenticity, the honesty of our actions, of why we actually did something. And that information we can use to do something else. And when we change our actions, we have a chance of aligning them to intention. But if we never change our actions are predictive. They're not going to just magically align to our intention. That's what this is all about. Becoming a professional at life. And if trading is your intention to do it, well, there's not really a better way to show that, to demonstrate it, where we can use that information to be intentional in the rest of our life. There's a little bit of trading psychology for you one-on-one. Now, how do we do this and how do we put this together? Well, we have our areas. We have our areas of interest. Okay? So now what do? Now we turn around and take our short time frame charts and we look for reasons and places to enter around our plan. Our plan is here. What is our plan telling us? Our plan is pretty simple. If price action holds this area, we want to be long. We can look for pullbacks into this area to look for longs. We can look for pullbacks into this area and look for longs. Okay? But what do we need to see? The same thing that we need to see in order to define a trend. Higher highs and higher lows. And as long as we're making higher highs and higher lows in this area, we can look for positions to go long. Where do you look for your higher highs and higher lows at? Your shorter time frame charts. Because think about it. If price is rotational on a daily chart in this area, okay, what is it going to have to be eventually? Let me raise this up. There we go. What is this going to have? If this is going to be, let me ask the question again because nobody was able to see the chart. There we go. If the market's rotational in this area, use a bigger area to see. If it's rotational in this area here, you're not going to see higher highs and higher lows in your shorter time frame chart. You're going to see something that looks more familiar like this. These aren't higher highs and higher lows. I mean, you haven't broke a low yet. It's a bad example. We're actually in a trending higher, right? Uptrends. Let's find a better example. Here. Right here. Are you making higher highs and higher lows? Are you making lower highs, lower lows? You're doing all sorts of stuff in this area. You just broke out to the downside off of a downtrend. You're in a consolidation period here. This is definitely one of the areas. So how does this area work out for you in this context? In this area, you want to be looking for longs. But price action is in a downtrend, consolidating in an area, in a downtrend. Instead of looking long in these areas, short to move in the direction of the trend of your lower time frame chart. You closed below the area. Price action came back up and tested again. There's your short area right in here. Unfair highs, unfair lows. If you can't see it visually, put something on there that allows you to see it. Like this. Here's your unfair highs. Here's your unfair lows. Sell. What happens if price action comes back up into this area again? If you're imbalanced, if you're imbalanced or a trending market condition up in this time frame, look for your longs that's coming back through here. This is why we need to stop looking at areas as that's a buy area, this is a sell area. Because price action doesn't care about what you think the market's going to do. It doesn't care. It cares what the participants are doing. And the participants in this area are telling you short, not long. Were you looking for a potential long in this area? Sure. But price action's not telling you that the long is setting up. Don't get stuck in a direction. Let volume show you the way. And what is volume telling you in this area? Look at the volume and the highs up here. You get higher volume up here, right? Higher volume, and price action closed well below the mid-range of the bar. You don't have buyers strong in that market. If they were, they would have broken the high, or price would have closed in this range, not closing all the way down here. I bet you when it tests, it's on low volume. Is your higher volume up here? Look at your low volume right below that area. Price traded through it, couldn't break your highs up here. Couldn't break your highs. And look at the volume. 100 and something, 83, comparatively to what? 157, 177, 200. Less volume. Buyers drying up at the highs. Price action closing near its low. If you didn't have the wherewithal or the confidence to enter up here, enter on the break of the close of this previous bar. Just a contract. See your high volume up here, can't get back above it again. Short around this area here. Add into your position. Where are you wrong? If you break above here. Use your inventory to scale into the position. Doesn't look like a market that wants to trade higher to me. Where's your higher highs and your higher lows? Account management available if anyone's interested in your investment plans. Link in bio. It's helpful. Thank you, Sanam. Thank you so much. That is so helpful. Because you're right, I'm not talking about account management and how to scale into positions here and how to scale out of positions. And the price action continues down. And in this context, this area, right, of entry, let's just call it 28,860. Where is that at in the context of our overall plan? 20,860 is right down here in this area. So it's this little area that we're trading in here. And a longer term perspective, where is that? 860s right down here. Where's your value area low? It's right down here at 681. Where'd this go? There's 678 right there. Oh, it's 870, sorry. Well, it does, it's 750. Yes. We're looking for 680 right down in here. Didn't quite get there. Went to 720. 40 points off of that low down there. Okay? Plenty of room for profits if you're scaling out of your positions. When this low breaks, you're still in your trend. Where's your next higher high? Up here. Where's your stop? Up here. Now you might be reversing around one of your areas. You don't want to buy up here. Wait for your pullback. came up here back into this area. We rejected. You're anticipating a pullback anyhow. There's your area when it comes back and tests your high volume. To short, looking for your pullback. Price action barely broke a low in here. Move your stop back to a break even. Price action goes strong the other way. If you got out with a break even, there's your re-entry right down here when it breaks this range again. Could be back in here if you're quick and you really get good at this. You can see the rejection up here and you can short someplace up here. There's nothing wrong with shorting down here, looking for your pullback. Where you're expecting your pullback to go to? Well, where does price action like to trade around? High volume. Why these areas? The two highest volume areas of this little rejection move below us. Let's see if price gets back there. Almost. Almost. In, near, and around. Price action pulls back into the high volume, can't even break that area. There's another long position looking for you to come back up to the 840s. Price action barely breaks the low on lower volume. There's your sellers being absorbed by your buyers, and there's price action moving back up into your upper area. Now, I'm doing this on static charts. It doesn't really mean a lot. Let me do it on live charts to show you how it all works out. That's how you create your areas. That's how you create plans. Now, go back to the charts, study your own charts, study your own market, and do it for yourself. The same concepts. What are the concepts? Find your areas of unfair highs and unfair lows that make sense to you in this time frame. Go to a higher time frame. Doesn't have to be another daily. It could be anything. It doesn't matter. Go to another higher time frame. Pinpoint those areas based upon what this is telling you. Take those areas, apply them to another higher time frame, but this one a lower, right? One that you could really actually trade around, and put your areas in your area of value. Why do you want to make sure that this time frame is an area of value? Because you're trading a value on your other time frame, or your higher time frames. So you're not going to break out of value on your short term. The short term you might start trending, beautiful, but you're trending in the context of value. Don't mistake those two ideas. Always go back to your higher time frame or your highest time frame and allow that to tell you the market condition that you're trading in. And if you do that, you're always going to be tied to direction. Am I blocking the spam accounts? I am not, Adarius. I've only been streaming now for a few weeks. I'm not as competent in all of that as I should be, and so no, I'm not blocking them. And also too, at this point in time, I really don't want to block them. Let them spam. Thank you so much. You know why? Because you're keying in more comments on my videos, which helps with the algorithms. It's annoying, but you know, that's all right. Because I think the benefits outweigh the annoyingness. You know what, Darius? Figure out what it is that you want. And I'm not saying this to you in personally, right? In general, okay? Figure out what it is that you want and just align yourself to it. Because when you do, everything, you start seeing all the things of why it's there and why it's aligned. And the things that upset you or did whatever in the short term, right? it doesn't phase you anymore. I do trade live. Yes, Jacob. I trade live between 9:40 and 10:40 a.m. In the US session. Now I might be changing that. I might be changing that to the London session between 5 and 7 a.m. I'm not sure yet. I'm not sure. I traded for 10 hours on Friday, guys, and I was only in sim, okay? And I was doing some asset management stuff. I was doing some other things, okay? My largest position that I was in with any of them, I was trading micros as well. I wasn't trading the NQ, I was trading micros, okay? And in the micros, I was up $62,000 on Friday, trading for 10 hours straight, okay? I'm not saying that to, oh, wow, look at me, right? I'm working on some things. I'm developing some things. I've been out of the markets for a while, but I'm seeing things with a level of clarity right now, being away from it for 6 years, that I never saw before, okay? And that 62,000 didn't come in from just one trade, and I took over 100 trades on Friday, all right? For that 10 hours. I was scalping. I was doing all sorts of stuff. I was working on some money management stuff. I did let a position go about $18,000 against me. I got the gap up. I got the down. I was doing a lot of stuff. Not only did I get the up, right? Not only did I get the up, but as we were, where is this dang thing? I'll show you exactly where I got it. But let me talk to you guys about the live a little bit of what it is that I'm working on and what I'm putting together, right? What the rock has cooking, right? Okay. I went in up here, so I didn't catch the low. I came in on this bar. Okay. And I was trying to get in right around this area right here. And I actually ended up getting in up here from some slippage because I always enter at the market. Okay. That was my entry. And then I added into my position. It was coming down through here. I wanted to get really heavy. I had some limits down here. If we broke this low, I really wanted to see this low break. I wanted to see the seller absorption into this market, but I started adding in to the area here. And then as price action continued to move higher, I scaled out and I kept adding into the position, anticipating this area to hold, okay? That's how I trade. I add, I scale, I add, I scale, I add, I scale, all right? And I was doing that all day long on Friday, and it was absolutely phenomenal. And to me, everything needs to be authentic, because nothing matters in what you would do off these charts like this. Everything matters live. This is why I do a lot of my replays and stuff live, and so you guys can see how my plans come together, how I trade around them and the practice. But I'm kind of torn. And I'm torn because, one, when I go in here and trade live, I start explaining things. I have questions and those type of things. And I'm not very good right now at just focusing on my trading. So I'll miss stuff, or I'll be entering a little bit too late. And my live trading is not going that phenomenal right now because of all of that stuff. So that's stuff that I need to work on. Okay. Has nothing to do with the ability to trade or anything else. It has everything to do with, I need to figure this out. The second thing I was planning on doing is I was planning on trading on cash, okay? And in cash, in my account of what I can do in cash, I can take a $20,000 to $30,000 hit, which means that I don't have to use a stop, okay? And I can scale into positions. And not only can I scale into positions, but I can use position sizing to get myself out of expense trades. For example, I tried to go long in this area here on Friday. Price action came down against me. I was in, I think, 6 contracts in the NQ before I switched over to the micros because of the volatility. Price action came down against me here. I was like down like $1,200, $1,800, something like that. I think maybe about $2,000, $2,200 if I remember right. When price action started to pull back here, I started to get heavy. I was in 18 contracts in here, and on this pullback here, I was able to get out with a break-even trade. I think I was up like $400 or $500 on the whole position. Okay. That's asset management. That's what professional traders do at larger firms because they have the bankroll to do it. I feel like I feel like that information is good to see, but it's not going to help an individual that's trying to pass, let's say, a prop evaluation. So I'm going to be going into a prop evaluation. You guys can see it already. I have a Tradeify account right here. Okay, you can see the number, you can see everything else. Okay, I already have it. The reason why I'm going to use Tradeify is this. They have a $4,500 end-of-day trailing drawdown and only a $9,000 for the account for gains. Okay, the trailing drawdown is extremely important. All right, Ram, how's it going? I just created your video for you, Ram. This is what this is going to be. I should have it edited and ready to go for you on Monday or Tuesday. Good to see you. I hope you're good from Friday. And so what I need to do is do this step by step and how you develop yourself into a consistent trader to pass evaluations. Because I think that's what you guys want. Okay? Now, we can do that one of two ways. The first way is to give you the pieces to build a methodology like I just did. No, you're the best, Ram. I truly appreciate you for putting that together. Okay, for asking me for that. Now, where was I at in my thought process? I'm 50, and so my mind doesn't work as quickly as it did in my 20s and my 30s. Lose train of thoughts. Oh, yes. So what I need to be able to do is come in here and demonstrate how to do this. Now, there's one or two ways of doing that. One, I can come in here, teach you the fundamentals, a framework, not a system, not a trading methodology, a framework that you can then use that framework in order to develop your own trading platform, your own trading system for you. That's what I'm doing here. But then I think that there's another thing that I can do as well. And that's how to actually develop a trader from the ground up. Try going Lucid, trading it great. Once you go live, you can take daily payouts. So Jacob, this is my only issue with Lucid. Okay, this is my only issue. Lucid has a high watermark trailing drawdown. Okay, that's an issue for me in my trading style. Doesn't mean it's an issue for everybody. It's an issue for me and my trading style. So what does that mean? Let's say you have a $1,500, make the numbers easy, a $2,000 risk limit. So let's say you have a $50,000 account and you have a $2,000 risk limit, okay? And you're at $48,000 in your account, okay? So at $48,000, you can risk $2,000. But let's say you make $1,000 one day and now you're up $51,000. Well, your trailing drawdown doesn't stay at 48,000. It goes up to 49,000. But then let's say you turn around and you lose that 1,000 within the day. You're still even in the account. But now you're at 50,000. Your trailing drawdown stays at 49,000. So now the next day you only have $1,000 of risk. What I really want is what Blue Sky has. And that is a $5,000 static drawdown. It doesn't change. It doesn't move because even Tradeify is going to move based upon the end of day. Okay. And what I was down in the end of day. And it's going to mark from where the account value is at the end of day. All right. So it will move. Blue Skies doesn't move. It's a static 5,000. That's it. 5,000 from wherever you're at. I don't like the trailing drawdown. No. And it does suck, and it's like now being at a casino. Why? Because the Vegas and those Atlantic City and those places, Morocco, they weren't built because people make money. They're built because the casinos make money. And this is the way that Tradeify, that Lucid, and some of these other firms out there stack the game in their favor. All right, and most people don't know this. Most people don't know about the high water trailing drawdowns, high water mark trailing drawdowns. They just don't. And so I'm really trying to develop traders. I mean, I've been in this industry for over 30 years. I took a 6-year break, okay? But I've been at brick and mortar prop firms trading stocks just with a time and sales before we had footprints or anything else, okay? I've been retail. I've ran trading platforms before where I'm live trading in front of individuals. I've done so much in the trading world. What I really want to do is put something together that comes in and says, okay, we're going to develop as traders. And to give you guys an idea of what this means and where I would start with this, I would start with this one single chart. Nothing else, just this one chart. And let me find it real quick for you, because I had it and I don't know if I didn't save it or what, but it's easy to bring back. And it's easy to bring back because it's just what I'm proposing is something that's pretty simple. So let's just bring this back up. All I need to do is duplicate this chart. There we go. I knew it was in there someplace. Now we're going to delete everything that's on this chart. We're going to take off every single, you guys can't see this yet. I'm sorry. Give me just a second. I'm just taking all the lines off and everything else along those lines. Okay. So here's your chart, okay? We're going to remove every single indicator, everything that's on this chart. We're completely removing everything. We want just a blank chart. We can't delete price, duh. There we go. Okay. And now what we're going to do with this chart is this. I want you to go into replay. I want you to bring it down to like a 15-minute. Do this with every chart that in any market that you want, that you're interested in trading in, okay? And now what I want you to do is replay this chart. Trade of 8. It's a free software. You can pay a small fee through most of the brokerage firms, and you can get the volume profiling and the things that you need in order to be able to use it. It also has a replay function. Replay it. Replay it fast though, not real time. And every bar, determine what the next bar is going to do, up or down. And watch it and watch how it develops. And don't pick the direction based off of the open. Like, oh, okay, it's an up bar. Well, you know, it's going down, but then it goes up. So which one is it? No, determine what it's going to do. Is it going to go up or is it going to go down? And then watch what it does. Okay? And what's going to happen is you're going to learn if you practice that consistently, okay? And I've been doing this myself. If you practice it consistently, you're going to learn how price behaves in your market. And you're already ahead of the game at that point in time. But that's how we develop ourselves as a trader. We don't look at static charts. We look at dynamic charts because we trade dynamic charts. We don't trade static charts. We don't trade back data. We trade in the moment data. So we need to understand how our market behaves before we can do anything else. Yet most of us will just put a bunch of indicators on a chart, turn around and create a system off of it from back data and say, okay, well, we got a trading methodology. Learn how price works first. Remember, price is the result. Don't even have volume on there. Now, what I do, and I will let you know what I do because I want to be extremely authentic with everybody, okay? Because the moment that I lose credibility in anything that I say or do, I've just destroyed my ability to help you guys develop. I will add this on to my charts. And the only reason being is it does help me determine what the bar can do as it's developing. So maybe I picked long, okay? Maybe I picked long here. But look at delta. This is telling me rejection. Even though this is an outside bar and most bars that I wouldn't try to trade off of, I'm thinking short here because of the strong delta and the rejection and price up here. And there's the down, right? This bar here, look at the down delta, but look at the strong close. I'm anticipating up. Price action goes up. Okay? This is what you want to be able to do. I'm to the point right now that I'm only in a 24-hour period of this. I only have 6 or 7 bars that I'm completely off on. And I can demonstrate that later. I don't want to get into that deep. But to me, this could be extremely valuable for traders. And I was way over here. I'm sorry, guys. The delta, that strong delta on these highs. Okay? I don't have a method or a system to sell you guys, to give to you and say, hey, this works. And the reason being is I spent over $120,000 on various trading psychology and methodologies and systems and all sorts of stuff. Okay. I paid somebody $12,500 to teach you guys to learn what I just taught you guys in creating these plans. Okay. I paid some guy $12,500, 10,000 euros or 10,000 pounds. And at the time with the exchange rate and stuff, it was right around $12,500 is what I paid somebody to just learn how to do this alone. Okay? I don't want anybody else going down that path that I went down. That's why I came out of retirement, and that's why I'm here doing this. Now, developing traders, to actually develop yourself to become a trader, that's a little bit of a different story. It's not a methodology anymore. And I am looking at packaging this into some sort of product where all of these teachings are available, but I'm also looking at it to be something extremely affordable, like maybe $15 a month for a paid subscription. $15 a month to learn how to develop yourself as a trader. Something extremely cheap. But what it does though is it makes my intellectual work, it makes it, you're adding a sense of value to it. Cheap, yes, but it's not because the information is cheap. It's because individuals are already paying for evaluations and you're paying for, all of the other things that you have in that context. If you really want to develop yourself into a trader, let's do that. So this is a product that I am looking at putting together, and this is part of that process because I believe that this process is very important in developing individuals as traders. And it's not just developing traders, it's developing professionals. And that's the mission. How do we develop professionals? Again, what is a professional? An individual that's able to align action to their intention. And that's the course I'm going to be building. And I'm going to be using trading as the laboratory for that. So yeah, that's what we're going to be working on. Now, let's stop talking about all this stuff. Let's stop talking about theoretics and let's get into actual trading. Anybody in the group right now, give me a date between March 31st and July 16th. It has to be through a Monday through a Friday, and it has to be a trading day. Give me a day. Maybe a day that you struggled with, maybe a day that you did really well, maybe a day that you just, you weren't really sure exactly what to do and you want to see, how it works. Maybe just a random day. Just give me a day. And the reason why I'm asking you for a the reason why I'm asking you guys for a day is that way it takes me out of the equation of picking. It's now random, where I could say, oh, okay, well, let's go to Monday. And before I came on here, maybe I studied Monday for like an hour, right? And just got really good at trading Monday. And then I come in here, I'm like, oh yeah, look, this is what I can do, right? I want to take that scenario completely out of the equation. That's why I want you guys to come up with a day for me. And the only reason why that date range exists is because that's the days that I have data for. July 7th, done. Let's do it. I love it. Jacob, thank you so much. I appreciate you. All right, let's do July 7th. This is going to be fun. Okay, so we're going to take live data off. Replay. And then do you want the US session? What time frame do you trade, Jacob? Do you want the US session? Do you want something on London? Do you want Asia? What can I set this up for you with? What time? US, beautiful. So we're going to go ahead and set it for right now to 8:30, okay? Because we're going to build our plan off of 8:30. Okay, and then I'm going to fast forward to market open to 9:30. That way, what we were doing here is we are creating our plan. We're doing everything that we would normally do, right? We're just doing it within the context of, and then we're going to do it for set up for 9:30 for trading. So it's just like we're doing an actual full trading day. So 8:30, July 7th, 2026. We're going to go ahead and hit set. We're going to let all the charts come up. So TikTok, I'm going to have to bring the charts over when I create my plan. Ram, if you have a screen recording device, record this, because I'm going through my whole process of creating areas again. That way you have access to it until I get that recording done for you. You just turn it on? That's hilarious. I used to do the same thing. I'll admit it. I used to just turn my charts on and just start trading. I was that person. Makes me laugh today. Let's see. Oh, we still have a chart that's building. Hold on. I need to be more patient. Okay. So everything should be taken off. We're going to put this over here for right now, and we're going to go ahead and start to build our plan. Now, here's the issue with this. Split, unsplit, unmerge. I just want to oh, you know what? We can reset all. Oh. Now, the only problem with resetting all is we got to build this back up into its own little thing starting from right here. Yeah, that's going to take a while. So let's not do that. Let's go into July 7th, which is right here. Okay. So we're in July 7th right here, and we know that we are trading in this overall range in here. But I do need my unfair highs and unfair lows. Okay, let's get to work. It was not going to take very long. We have to merge each one of these into one another, though, so it's going to take me a little bit of time in order to develop this. And the reason why I need to do this is because I want to show the consistency, right? And so you don't have to do this every single day. I have to because I need to get the July 7th day not part of the profile. And then once I get this done here, this setup, then I'm going to hit play and we're going to see how long it takes me to develop my own plan. Okay. That way you guys, of course, everybody's going to be a little bit different. People are going to take longer than others, right? But you get an idea of when you get this down, how long it's going to take to build your PMA out every day. Okay. And PMA, of course, is pre-market analysis. Thank you so much for the like, James. I appreciate you. And thank you so much, everybody that's followed and liked and stuff. I apologize. I've been doing a lot of teaching. I haven't been doing a lot of thinking, everybody. But I do want you guys to know that I truly appreciate each and every single one of you and the support that you give for this work. Truly. You guys are the reason why I'm doing this. And again, I just appreciate the positivity that you guys share in terms of this work. Makes me want to do more. It makes me want to be better, to get better for you guys. Okay. So what do we have here? We're trading in value. We have our unfair highs above us. We have our unfair lows below us. And this day is interesting because what we did on this particular in the US or in the Asia session and those type of things, right? Look what we're doing. This is our current bar. So this is what the overnights did, okay? From, the Asian Open until, or 6 p.m. New York, right? Until 8:30 a.m. for the US, right? So news comes out at 8:30, some other things. Let's go ahead and hit play. Just want you guys to know. We can look and see where this time is once I get done with this, all right? So there's the areas, and here's our long area right here, right? Now, we're going to go over here to our other time frame, and we're going to say, okay, here's the unfair lows. So the unfair lows is already trading price action where price went on the overnights has already what am I trying to say? So the overnights, right? We can't even see in the US session, right? So we're trading below where current price is. And when you look at where price is trading at, we're collecting volume down here at the low of this bar. What does that mean? More participants are interested in the lows than they are with the highs. Okay, that's important. It's important information for us. That area of unfair lows is way down here. Okay, price action was in here. So what we want to index, we want to keep this area, but we want to index these unfair highs above us, or the unfair lows. Okay, we want to index all of these, all right? And that's the area there, and that shows our gap. And now we want to index this area here, and we're going to extend this out as well. And these are our main areas that we're going to be looking at in terms of our shorter time frame. Longer time frame, but still the shorter, right, for building our methodology. Now I want to go ahead and get rid of all the aligns that are not associated with what we are doing here. And I should have gotten rid of all of those from the higher time frame. So I'm going to do that real quick. Hold on. Erase all, confirm. Let me draw. All I'm doing right now is just drawing in the same lines that I just drew. Okay, there we go. Now, the red is actually coming from this time frame, from this part. Okay, good. There. So these are our areas of interest, right? For today. Okay. Now, if we go back and we look at a 4-hour, right? But remember, just a lens. Okay. Price action has been trading in this range in here. Okay. We haven't broke out to the upside at all. We broke this range down in here, but this is the range we're trading in. What we want to index is the bar that closed above this range here. And that's this bar right here. That bar becomes the volume profile bar. Extremely important. Okay? Why? Because that's the market shift. And then price action's just been trading in these unfair highs, unfair lows since. Now that we have that built, now we can go back to our 30-minute, get a little bit closer, right? And we can say, okay, price action has been trading in this range, but we're in a much more consolidated range here. And so this profile is helpful, but it's not giving us all the information we could possibly utilize. So where is the bar that closed below the last range? Well, there's your last range right there. There's your close below that range. If you want to, you could say, okay, here's your other range right here. Here's your close below that range. We're going to draw it from here. The bar that breaks the range is where set our VP. Yes, that's what Jacob, absolutely. Okay, and this is why. This is why I use this. I don't, and most people don't, okay? Most people say, use a swing high, swing low, okay? Swing highs, swing lows can be broken. They don't mean anything. What brings meaning to me, in my viewpoint, the way I read price, is breakouts. Breakouts are extremely meaningful. Why? Because we can see them all the time, especially if you use initial balance or something along those lines, right? You can always see a breakout. When price action breaks out, it can do one of three things. It could start trending in the direction of the breakout. It could trade in a tight range of consolidation after the breakout, or it can move back into prior value. That's the market shift bar. And by putting a profile on that bar, what I've just done is index the most important bar in my methodology. Why is that the most important bar? Because it's the bar that's telling me the market is looking at making a shift here. It can do one of these three things. I need to watch this. Does that make sense? Let me know if you have questions about that. Let me know if you don't agree with that ideology as well. So this is the range. And if you look at most of our areas in this range, right, we are in value in these areas. Okay. Now, what we can say, that aligns nicely to this area over here. This area is in value, and we're in a tight range of value here. Okay, a very tight range of value. The question becomes, is this tradable? 600 to 700? It's 100 points. Absolutely. This is 100% tradable. So let's see if we can find anything in here shows us any form of possible rejection. Look what that aligns to. Your low volume node in value. Here's your high volume area in here. Okay. This is not really necessarily coming off of VPOC too much. So I'm not necessarily worried about that. This little range here is 100% tradable. We get above this range in here. We're looking for a continuation play to value area high up here. And we're looking for our low volume nodes for shorts. In the context of overall value, if we come back up here into this area, we can index a low volume node here, and we can index a low volume node up here. And those would be areas that we could be looking for areas as well. And that's our plan. We now have our areas and our plan for the day. And it's now 8:37, and I was teaching a lot in that concept at 8:37. Any questions on the plan? Any questions on how I created that plan? Ram, any questions from you and how I drew my areas and why I picked the areas that I did of what I feel is important? Give everybody a few moments to type in any questions or anything else that anybody might have before I fast forward this and get into 9:30. No questions so far? Beautiful. And if that information was in a video for you, Ram, would that be able to give you the information that you need in order to be able to do that, to be able to build your own plans? And I just want to bring this to everybody's attention here too, right? At 818 was the first time we came into this area. Price action before then has been moving in a trend higher, breaking out of this range, okay? Where would the breakout for this prior range be at? Here's your range here. This is including your range here. I'd really be indexing this high, this bar right here. So if you take this bar, you can even do this on your short-term charts. You can do it on whatever time frame it is. It doesn't really matter. I don't usually trade around this, but you can. Here's your unfair lows, okay? And then do we have any low volume in this profile? And that's where it gets a little bit tricky. This is why I don't use a lot of these profiles in this type of trading, right? Because you don't get a lot of volume necessarily within these bars. But what you can do though, is you can say, okay, there's a low volume here. There's a shelf of low volume here. There's very low volume in this area right here. There's a very low volume in this area. I can take this, and I can bring this over, extend it, and I can say, okay, there's also very low volume in here. Trading near, around, near, in, and around, right? There you go. There's your rejection off of your test of those areas aligned to your longer time frame area. Okay? Let's go ahead and delete these. And let's get into our day. We're going to fast forward this. I'm going to bring this over so everybody can see time and everything else that's associated with this, right? So we're all on the same page. Everybody can see. We're at 8:55. I'm going to move this over real quick just so I can make sure that we stay in the context of our time. So at the open, our bars aren't all over the place. $9.28. Let's fast forward it to $9.29. There we go. So $9.29 in 1 minute. Price action is going to open. And look where we're at. We're already in our low area, right? And I do want to do one more thing before the market opens. We have another low volume below us that we can index here. I think that area is going to be important to index. Now remember, trading in, near, and around our areas. Not looking at them as, oh wow, okay, this is in unfair lows, or this is an area of, where we're looking for buyer support, we're going to just buy this, right? We want to see how price reacts, the result of price around these areas. So price action is immediately coming out of that area, right? already moving up into the other area that we're looking at for potential rotation, because this is where the market's been rotating since, what time did the rotation start? About 12:30 a.m. New York time. So 9 hours of rotation. I want to check one thing real quick before this gets started, because I think I adjusted it. Nope, that's perfect. Okay, good. I use the first 15 minutes for my initial balance. You can use 30 minutes, you can use an hour, you can use whatever is comfortable with you. I just like to use the 15 minutes because I'm willing to start entries even prior to the 15-minute mark sometimes. So price action is getting into this area after breaking back out for a test again. It's exactly what you'd be expecting. If you understand price, right? Use that 15-minute example that I showed you, right? You'll understand price. You'll understand where it's coming back into, why it's coming into those areas. You might even have a reason to do a scalp right at the open once you come back down into that area after this test. So now what we have nice rejection above us, a bar that closed around the mid range of the bar. So we're not looking for a trend to start developing from the open here. Could it? Sure. Yes. But anticipating that to happen? Probably not. We're coming right back into the high volume. We're finding some rejection to this area. We're not accepting lower prices yet, but we're finding some rejection up here in this area. Price action's coming off the high volume in here, looking for a rotation down. Look for a rotation down back into the open of this previous bar, maybe a little bit lower. Let's see what happens. High volume acting as a magnet to price. High volume acting as a magnet to price. Coming off of value area high, so we'd be anticipating value area low to be tested at some point in time. Value area low is down here at 428 and a half. Okay. And then, of course, value area high, if we start finding higher highs, higher lows within value, our value area high would be up here around the 6175 area. Well, the 6175 doesn't really help us much, does it? The 30,071 area. And then the one for the larger time frame on the 24-minute, it would be 261.75. Now, look, we barely broke the low. Barely broke the low, okay? If you want to do a scalp trade, a long right after it broke that low would be a perfect time to do it. Were it to come up into the 80 to the 90s from around a 70 entry, that's enough for a scalp. Price action broke the low. We're now trading below this area. We have stronger buyers and sellers talking in here, participating. What is that? An auction. Participants talking to one another around the same price on both sides of the market. That's significant. Price action moves directly to that area, starts breaking lows. What can we assume here? That price action could want to possibly continue to the downside. Why have I not taken any trades yet this morning? Because we're at the open and I'm giving it some time. I'm developing strategies for entering around the open, just like what I did here, and I can discuss with you what I think it's going to do, but it's not in my trading plan yet to take trades. And even though this is sim, this is a replay, I still need to react to my trading as if it was live. It needs to be one and the same. What you do in practice is what you're going to do live. Okay. And if you look here, we got auctions all over the place. Buyers and sellers, buyers and sellers. We got support and resistance throughout right here. Okay. Now, price action now is starting to reject off of this area. Trading around this area. I want to see what happens at the close of this bar. Price action still continuing down. We're looking for price to come down into the 428 area. So we have plenty of room for the downside. Price action is finding a little bit of support in this area where sellers were a bit more aggressive, right? Price action is coming up here into this area of resistance. I would be anticipating that price action is going to come back and test someplace in this area up here. So I'm going to go ahead. Oh, that's not good. There we go. Got to remember to do that. So I'm going to go ahead and take an initial position here. This is a little bit high from where I want to actually be entered into the market, but I was trying to enter a little bit lower and it just didn't let me. And this is just going to be a little scalp for me coming up here, at least testing the high of this area. I do have resistance right above me. So if I get any sort of area coming back down and we hold the open of this bar and we come back up into this area, I'll be looking for an area to add back in or scale into the position itself. We're up 350. This is just a scalp for me. So I'm going to go ahead and start locking in some profits into this. There's no sense in taking a position that's $350 in your revenue in favor of the trade and taking it for an expense trade. I just don't agree with that at all. We're having problems up here at the high, so I'm going to go ahead and lock in a little bit more profits. Locking in 160 is probably going to come back and take me out. Beautiful. That's fine. Already have 160 locked in for the morning. I'm still expecting it to go up. I'm still expecting it to come up here into this area. What I look for in these types of scalps here is momentum. I'm looking for momentum to come in. And if I don't see the momentum, I really don't want to play a lot. I'll take you know, a few dollars here and there, right? 160 on a position doesn't seem like a lot. But you do that 10 times in a day at $1,600, right? Even if you can only do it at 50% accuracy, it's still 800. Coming right back down into our area again, right? Right back into the area, seeing the same exact formation we saw down here, but look at the high volume that's coming in. Do you see the difference of the high volume coming in on this low comparatively to what we did when we came down here the first time? We have strong participants in the market right now. A lot more participants than we had over here when we came down to test these lows. And what happens? We break the lows. Why? The higher participants. So we're looking for a continuation down now. And no longer rejection off of this area. The close of this bar is going to be important. That high volume below us, I'm anticipating it to be tested. We're testing it. We're not breaking lows yet. I'm going to go ahead and go long here. I'm looking for a possible continuation play to the upside to test back into these highs again. Why? The high volume at the lows. The high volume is telling me that sellers are not strong in this market. Again, this is just a quick little scalp, okay? Up 320, I'm going to lock in 105. We're up 440, I'm going to lock in 180. We're up 600, I'm going to lock in 280. We're up, what? 900, I'm going to go ahead and lock in 600. I'm going to put my target now just below the open of this bar and see if we can break this high. We're up 705 in the position now. Price action is continuing to move a little bit higher here, locking in a little bit more. There's 890 up 1050 and it's 9:39 in the morning. Any questions? Any questions, any comments, concerns? Came right here into this high volume again. Rotational in this market between this high volume and this high volume. If buyers are in control of this market, we should see the highs break here. If sellers are in control of this market, we should possibly see a high break by maybe just a tick. This whole area up here to hold. Sellers come back down through the open of this bar, continue to trade lower. Look at Delta right now. Delta was down. It's nice, strong down. Look where we closed. Look at this little bit of Delta that's come in, and we're already getting ready to break highs. This is telling us that we could start seeing some momentum into this bar right now, and I really wish I was in the market at this point. To the long side. So I'm looking for momentum to come in here. If this high breaks on this bar, I'm looking for price action to boom, boom, boom. Seeing some rejection up here. I'm going to go ahead and take a quick short stab at this market, looking for a continuation play to the downside. I don't like how price came up there and broke that high, so I'm going to be pretty aggressive on this position right now because this could snap up against me pretty quickly. Just took a nice little break-even trade there because I didn't get the sellers in there that I was looking for as we came back down here. We're still seeing the buyers. The buyers are still strong. They're still in control of this bar. So I don't want to use a lot of risk in a bar where buyers are still in control of it. I tried it. Didn't work out to plan as I wanted to see it transpire, so I'm out. Close it around the mid-range of the bar. Back in late again. I was trying to explain the position instead of working on my entry, right? But we're up a little bit. 125, about 200, locked in another 75. 1125 on the day so far. What, 4 trades? 9:42 in the morning. Price action's holding the lows in here. Looking for price action to possibly continue to the upside here. Broke through the open of the bar. See how we have our delta down here? The delta hasn't shifted yet. All right. Delta is going to need to shift in order to show that buyers are in control of this market. Up 285. I don't even know what I was locked in there. 1175, basically another break-even trade. But notice on the positions I'm taking, I'm anticipating momentum to come into the market at some point in time in these positions. I'm taking the positions looking for that momentum, and if it doesn't give me the momentum, I'm out. You need a one-on-one in the live market. I'm going to go ahead and do this again because of the delta came in, right? We're about ready to go into a positive delta here. I don't want to give this a lot of room. I could take an expense on this position. I'm going to go ahead and do it. I don't want to because I'm anticipating this high to break. I'm anticipating a high to break here and delta to come in and push us up above this high nicely. There it goes, and there she goes. Ah, dang it. See, immediately found rejection in the market. This is telling us something, right? We come in, buyers are aggressive in the market. We get delta coming in here, and then look at how price action immediately came off of the highs. Sellers are up here. Sellers are up here. So now the question is, do we want to come in and continue to scalp to the long side in this position, knowing that we just had the sellers immediately react as price got up there? Doesn't mean I want to short yet, but I want to see what happens if price action comes up and tests these highs again is what I want to see. We may not get there. We might just go ahead and rotate to the downside right now. I'm up 1420. It's 9:44 in the morning. I have plenty of time. I don't need to keep scalping this same area here. I can give it a little bit of time. Let's see what happens at the highs, right? Look at the delta. We can't even get above highs there. Oh, beautiful. Okay, see, I tried to short there and I got in at a bad price again. As you can tell, my entries are not the greatest right now, right? I should have been entered right up here, but I clicked on something else and my cursor wasn't active on this particular chart and time frame. The highs up here, the sellers came in. I'm looking at these highs to hold. We're coming back up here into this area. I'm not seeing those same sellers come into the market here. So we're probably going to take an expense here. What I'm going to try to do is get out a little bit early, and I wasn't able to. So now we're only up 455. But we traded off of these highs again. I'm going to take another shot to the downside here and see if I can't get some possible momentum coming in to take out these lows. Up 120 there, back to 575. Okay, that 905 kind of hurt a little bit. It's a little bit of a wider stop than I actually wanted to take. I just wasn't able to get out of the market there. But look at our delta. Our delta's starting to come off again, right? Higher delta here. Delta's coming off. I'm going to go ahead and take another shot to the downside here, anticipating the low of this bar to break. And it's not right now, so I'm going to get defensive on the stop. Don't want to take another expense here. I'm looking for a rotation down. And stopped out. 6:15 on the day so far. 9:45. I got 15 minutes to make up an additional $1,400. Let's go. We only need one single bar to do that. That, kind of what I wanted to see. See the down there? Now, we just broke this low. I don't want to be in this position anymore. If we break this high, I want to be in a long. Because we barely broke the low. Buyers are actually absorbing the sellers here. I'm going to look for a test of the highs here. So I want to be out of the position in long if it turns around and breaks that area. Now I'm looking for momentum to come up here and break these highs. Little audible there, little change in direction based upon what price action is telling me. I'm going to go ahead and take another hit down here. And now it's time to wait. The market's too rotational choppy here in this area. I need to wait for a few minutes. I need to wait for a little bit of a range, and then I can look for another position. See what I mean by the range? We're starting to break out of this range a little bit. Coming into the higher volume. Sure, of course. Thank you for asking, Jacob. Appreciate it. Took a little bit of a hit there. We're negative now. We were up 16, I think is what it was. Now we're negative. But that's part of trading, right? So let's go and take as one bar here of momentum, and we're going to pick up a 12 to 16, $1,800 position. We're up 80. We're hitting the resistance here above us over and over again. I want to be out with a break even in case this does snap back down again. Again, not doing what I had anticipated to do from this area. So I want to be out. Coming up, testing the high volume, bar closed strong to the downside. I'm waiting for a pullback shift here. I'm looking for a place to enter short into the market to continue to test back down into the lows of this range. We're up 205, no reason to take an expense trade. Didn't get my target in there fast enough. I don't like how price came back up like this. So now I'm going to have to manage this position and finesse it a little bit. There's a 300, lock in 55, 280, 305, 310, 345. Still holding this area, so I'm not moving my stop. I'm looking for this whole area right here, these buyers and sellers, this auction to hold. They're held, 135, 305, still testing it, looking for it to come back down into the lows. Look at Delta. Delta is still strong. This is going to burst back up. This is absolutely going to burst back up. This is not coming down right now. So I'm just going to lock in the profits as I get it. Get us back into a positive day again. And look for the next rotation. Yeah, I'm waiting for this bar and not anticipating the lows to break, but here we go. We're going to move. If we move, this would be the bar that I was looking for. Do we get it? Okay, good. This is looking pretty good here. Up 1,000, locking in 780, 790. And price is going to come back and stop me out here. I need to move this a little bit so I can see the lows over here. Sorry, Jacob, I'll get it back over here for you. And there we go. There's the stop. Now up 740. 740 and it's 950. And we're going to go ahead and sell this again, looking for momentum to come back down to the downside. Why didn't I sell it up here? Because I didn't really have a high volume. I'm anticipating these lows down here to be tested. I'm expecting this low here to be tested, possibly trade down into the 425. All this rejection above us. Delta was still green in here. If we get a purple delta in here, look for a continuation play to the downside. Finding some support in here, right? Don't like to see that off of the lows. Seeing the buyers come in off of the lows, that means price could jack up against us pretty rapidly. The highs here are important. Couldn't break the highs, and now we're breaking lows. Now do we get momentum in the market? If we don't, we break the high, we test the highs again. The highs could possibly break because sellers aren't engaged down here, and price action's looking for an engagement to break out of this range. There's 255. There we go. We go ahead and move the stop here at 120, 550. Let's see if it'll take us. Let's see if we can rocket. If we can rocket down into the 400s. 345. Nope. Back to 1070. It's 9:51 in the morning. We're looking for 2000 on this particular day. 2000 to me is a nice little round number. It's kind of my intention each day. I like to be up about $2,000. So let's see if we can get another 1,030. We were so close to it, so close. And I took a couple of those expense trades in there. One of them was the 905, and I shouldn't have taken a position at an expense that big. But I did, and that's okay, right? It's not about being perfect in trading. It's about staying alive, following your plan, staying consistent, allow the consistency to bring you to the results that you're looking for. Oh, I think this is going to break up. Let's see what happens down here. If we get back above that open of the bar, I want to buy this. I'm expecting price action to spring back up again. It may not. It might go against me. But I'm really kind of liking that long here from this area. I might want to add into the position down here, get myself a little bit of a better entry. Okay, I need to use my inventory to be... I'm going to show you guys something, okay? So I'm sim here. I'm going to show you something, all right? This is going to be the bar that I wanted to be in short in. I think we're going to go get the momentum to the downside now because we didn't get that delta to come in. Look at the delta in here. I think we're going to be down strong. But I'm going to allow myself to go down here by about $2,000 to $3,000 negative. Okay, just got to trust me. All right, this is something you can't do in prop accounts, but something you can do in a cash account. Okay, just got to trust me. Let me trade through this, and I'm going to show you something here. We're getting back here into this area, which is beautiful. Come back down again for me a little bit. Hold that area. Good. And I want to do it again. One more time. Okay, perfect. Now, does this come up enough to get me out of the position? Not yet. I'm only in with 5. Beautiful. Got about another 7 contracts I can go with here. Okay. Do you prefer or not prefer having developing volume profile on for the session to get value area high, value for session, and anti... Remember you talking about on the short-term chart? I got to time this really well here. We're coming bound into the value area, low area. Dang it. I knew better. Why did I go long down there? That's okay. 425. Okay. Get a little bit of a better price here, but that's okay. We got to cancel this, put in the profit target here. We're down 1,300. I really want this to come up. If I would have been a little bit more aggressive down here, that would have popped up into this area. I've been out of the position right now and I didn't. That's okay. I have 6 lots left. I'm not going to do it here because we might go ahead and just continue down again here. So I'm going to wait for the next pullback to develop before I start reducing my position again. See, this is what I mean. You can't do this in a prop account. Don't even try it because the risk is just too high. There we go. There's the buy. Now, do we get back above? I don't think we're going to. I think we're going to break the lows here. I think we're going to break the lows, and I'm going to have to do this one more time. I think we're going to break the lows here, and I'm going to need to do this again. Let's see here. Where's the low at that I'm really looking for around the 428? We're going to hit that low. Yes, on the short-term chart, as we're looking for quick scalps, you can. I don't. I don't use it for that on the short term very often. I will if we're in a really tight range, but you don't have to. Now I want to see it come down below its open first. But this is the pullback I wanted to see. And I don't think it's going to give me what I'm looking for, but I'm waiting patiently. There's 1, 2, 3, 4, 5, and 12. Now, does it come up and get me out? We're holding the resistance here. I don't think this is going to hold. I think we're going to get another push down. I don't think we're going to come up into this area. And this is where one of those examples where you would take an absolute catastrophic expense if you're doing the asset management exits like this and you don't have the added inventory. That's the whole key, is you need the inventory in order to be able to trade yourself out of this. And you can't do it when your inventory is limited. Now, if I'm on micros right now, it's a different story. I'd have a plethora of ability to be able to get out of this position at that point. But I don't in the minis if I'm trading a prop account. Trading a cash, 100%, but not a prop. Okay, we're still holding this area of possible support, which was resistance. Price actions testing back up at the highs again. We do have the high volume here. We could see a push through this, but I don't think so. The way we keep coming back and testing this area, I'm anticipating sellers are going to come back in here and push us back through this area and retest the low. If we would have dropped down even just a few ticks, I would have been able to get this down far enough here that I would be out of the position at this high. It just didn't happen, and I waited too late for my my scaling. And now we're going to come back and break these lows down with momentum. This is the part of the momentum, and this is why this methodology, it hurts us as well a little bit, because if it does break down and we're still stuck in the long position, right, we miss the opportunity of getting out as the market is continuing to come down. Okay, there we go. See, I'm out of the position now without having to incur the expense. Up 12.10 on the day, 9:58 in the morning. Less than an hour of trading. Less than a half hour of trading. And we hit value area low there. We did hit the value area low that I was targeting at 428, but I was still stuck in that position and couldn't get out of it. I should have been short in here. I was looking at my charts, kind of annoyed with my last position, so I'm not thinking as clearly as I normally would, okay? This is what happens when you hold on to a trade, right? And you get in way too late into the position. But I'm going to go ahead and I'm going to add into this position if we hold that volume up there. And we did. Beautiful. So now if we turn around and break this area, I can look at getting into this a little bit more aggressively. as it's starting to come down against us. Why? Because of the way this bar closed below our low, we still have our area down in here. I'm still anticipating price action to go to. What should we probably do? Test around the initial balance area, find rejection from there, and look for a continuation play to the downside. I did this because of the way this bar closed here. I had an entry down here just in case if we decided to go. I really should have entered the first position up here though, instead of down here. That was an absolute mistake on my side. I'm going to go ahead and enter one more here as we're breaking through the high of this previous bar. This is probably going to snap back up and test the high here. Rejecting the high, but that high volume, this high is probably going to break. Now notice when I talk, right, I don't talk in terms of, this is going to happen, that's going to happen, probably, could, maybe, no shoulds, right? No woulds, coulds, maybe, might, probable, right? I'm speaking in words in terms of probability, okay, probabilities. I also don't like to use the words wins and losses, okay, because wins and losses, now it becomes, something about, excitement. You're winning, you're losing. It's emotional, right? These are emotional terms that we utilize in everyday life. And I try to take those type of terms out of my trading as much as possible. So I have expenses and I have revenue. All right. And if this position comes down here into this area, this is going to give me the revenue that I need for my $2,000 daily expectancy. So it's not like, I'm too concerned about this at all. This is scaling into the position. I've been down up to $2,200 in the position in total, right? Just hit the 550 mark on this. And I'm looking for this continuation to come back down and test these lows. Why? Because how we came down and we broke these lows in the first place. We do have a reversal down here, but we're rejecting the highs off of initial balance low, which is exactly what I would expect it to do. Now I'm expecting price action to come down and break through, or at least test these lows. And it's not doing that right now. It's doing something else. So we just kind of got to watch it and see what it's going to do here. As you notice, I don't have a stop in here right now. I don't have a catastrophic stop, right? I'm in the mindset this morning of trading cash instead of trading a prop. You got to put that into context, right? Of what's going on here. If I would have been entered the position when I really wanted to be up in here, we wouldn't be underwater in this in the first place. And I would have been able to trade this much more as a prop instead of a cash type position. Price action tried to break the lows there and immediately found rejection of buyers. And those buyers stepped in, and what did we get? We immediately got a delta coming in, market orders coming in on the buy side. Anticipate this high to break. Up here, trading around resistance to this high volume, attracting prices like a magnet to that high volume. See if we break through the open here. Look at the delta, see how the delta is shifting. We haven't even broke through the open yet. Now I'm anticipating this to break the lows. So what happens when you're patient? You're patient and you wait and you wait and you let price tell you what you need to do instead of going through and over analyzing everything and being like, oh, well, what's going on with this or what's going on with that? Or, let's put this up on the screen and let's look at this. Oh, this is telling me something different now. Should I be in? Should I be out? What to do? I mean, all of that stuff is part of the psychology of trading, right? And we want to stay away from all of that stuff as much as possible. I'll go ahead and lock in a little bit more here. So we did break the low, 24.65, 10:04 in the morning, hit the daily expectancy. Questions, thoughts, ideas? And Ram, you absolutely can. Okay. And in this context, right, what I would be looking at if I put a volume profile on would be this, where we broke through our range, right? Right here. Okay. That's now our lower range. And in the lower range, okay, in this context, there's our unfair highs, right? Here's our unfair lows, longs and shorts. Now, what is our overall time frame telling us? Okay, well, we broke through this area here and we came back down into value area low, right? We could absolutely reject value area low, but what's below us in the context of the breaking of value area low? We still have this high volume down here, right? And we don't really, and we have this unfair low right down below us. I'm expecting price action to still facilitate trade down into that area. So I'm willing to short off of value area low here. Now, in the context of shorting value area low, what I was talking about when this price action came up here into this area, right? When you look at this bar here and price actions developing into that bar, value area high is still above the high of this bar. That would have tied you in to a short a heck of a lot better of an entry than getting in where I got in down here. So you can absolutely do that in this whole setup, right? If that's what if that helps you. Again, I'm not here to teach you a trading strategy. I'm here to show you, to demonstrate how you can build a strategy and trade around it. How you can trade around it with cash. How do you trade around it with prop, right? How do you do that? And then, of course, I'm demonstrating that here. And as you see that and you watch it, what's going to happen? You're going to interpret that information your own way. And when you interpret that information your own way, you're going to be able to make it your own and turn it into a way that you're going to be able to act on it. And so absolutely put the volume custom profiles on your short-term charts if that's helping you. If you try it and it's like, oh, then take them off and don't use them. Any other questions? Any comments? Any concerns? And now you also know why I don't like the high watermark trailing drawdowns and why I want the static, right? Because these positions in here, taking some of those risk positions while market structure was still favorably in the direction of your trade, even though it's breaking the higher highs and those type of things, you have a risk structure that you need to follow. But what is that risk structure based on? The rules of a trading account, not the rules of the market. And if you can't stomach the risk in a particular area or position, know that and don't accept the risk, right? We're not trading price in the market. We're not trading as participants in the market, right? We are market participants, and the market, the auction reads us as participants. What we're trading is risk. Because when you enter the market, the only thing you own when you enter is risk. Risk if the market goes against you, right? And if you can't stomach that, then you need to find a market that you can. And if the NASDAQ is too wide for you, go to the micros. The mini is too wide for you, go to the micros, right? Go to 50 cents a tick. And I can tell you, even at 50 cents a tick, you can still make money. It's not like you're going to the penny stocks. I used to think that. And no, you can still make money in the market. Without having to use a ton of size. See the delta in here as we try to break into these highs? We're probably going to come down and test into these lows. I'm anticipating us to come down and test into this area right here. I should already be locked into a break-even trade here because it didn't do what I anticipated it to do. And so why assume the risk on a position, and why stay in a position if it's not doing what you anticipate it to do, if it's doing something else, right? Because if it starts to do something else, how do you manage the position? Manage the position when it's doing what you anticipate. That way you can already be out of it, and now you're just waiting for the market to tell you what it wants to do next. But right now with this delta, and when here, I'm anticipating that this bar can easily come up and just ratchet higher. Why the target there? Because I'm anticipating support coming into the market there. A lot of times I won't use targets, but in this case, I did want to because of that area in here. It's been holding, and now I'm anticipating it to possibly hold to the upside. I'm not liking this at all now. So we'll take a small risk here at 365 if we have to, because I'm not liking what this is doing. If we come back up here and test again, I'm going to move my stop and not take the full risk. But we haven't broke the low, so we could rotate back up in here, and it's not going to. Okay, I need to see my other bars in here and where we're at. Scrunched up like that makes it difficult for me to trade because I need to see my areas over here. And so we're still looking at a continuation play to the downside down here, but trying to get in right here. It's too low. Too low in the move. We really haven't picked up a good, strong momentum bar yet today either. We had the one, but I did that with size. That doesn't count. Mentioned Blue Sky. Yeah, I think Blue Sky has static drawdown only in evaluation. Once you go to funded, it's trailing end of day drawdown, 100%. That's one of the reasons why I haven't moved over to Blue Sky. Because here's the thing, right? This is the thing you also have to consider as well when it comes to your trading, and you come to, these, different prop firms and those type of things. You don't want to change rule set in the middle of your evaluation, from your evaluation to funded, because then you're going to have to trade differently. And you don't want anything that can cause you to trade differently. Okay. You want to stay trading the same style, the same methodology throughout. And so, yes, you're absolutely correct. You have a static on one side, but then it becomes an end-of-day trailing on the other side when you get funded. Now you have to trade the two different styles differently. Be wary of that as well. And this is going to break down here. We're going to come down here into this area on this bar. I'm saying that as an absolute because I think that it's much more probable than not that that's going to do that. There's the pop. We have buyers stepping in here. Not yet. Want to see some volume step in. There's 154, 174. Beautiful. Now we need our next bar. Let's see here. I missed it. I was looking over at chat there, and I missed that little move. That little move to the upside. Yeah, my psychology is not same when I trade 2 micros and 5 micros. Yeah. No, absolutely. Well, see, and size for me is completely relative. I mean, I used to trade 25 lots in the ES. I was trading 18 in the Russell, so you're looking at 18 in the Russell is $1,800 a point. Okay. So $20 a point and trading 5 micro or 5 minis, is only $100 a point at that point in time. I mean, it's like, the numbers don't matter to me anymore. If the numbers do matter to you, go sim and just start trading size. Literally, you're on sim right here, right? Pop in 100, enter the market. What happens? Do you feel it emotionally? Are you feeling that emotionally? Or are you just turning around and letting it, just be the same as it would off of 2 contracts or 1 contract? If you have an emotional reaction to it, then step off. But practice it. Put it as part of your practice. Because if you're emotional in sim, you're going to be emotional live. But is not the point of trading to get to the point where you start trading size? This is the momentum I was talking about. That's not how I hit the $62,000 either on Friday. I hit it because I was doing exactly what I've been doing in here with my trading it the same way. And I did have a trade that went 18 to $22,000 against me on Friday by doing my asset management exits. I think I was in 48 contracts at that time. I'm pretty sure it was about 48. Possibly rotate right here in between these 2 areas. Looking for a continuation down to the downside to test back into this area. I'm going to put 1 limit order in down here in case we get there. So I'm anticipating it to come down much farther than that. Now we're going to get the rotation up to here. This is where I'm going to want to be in another one. We do have, keep in mind in this position, okay? This is not a good short position because we have the rejection down here. Anticipate price action to rotate higher here, okay? I'm talking about the rotation in here. And if there's rotation and you're trading a rotation, right, you might as well trade the rotation instead of just talk about it. So instead of talking about it, I'm trying to demonstrate it. I'm trying to show it. Got out 1 there just to limit the risk. And now I'm just going to scale this out. And there you go. Another small, gain in there. That one that I made the 56,000, right? Take off 2 zeros from that. That would have been take off, what was 100? Yeah, take off 2 zeros. So 56,000, 56,000. Yeah, $560. So take the 2,400 I was up, 29. So we're about $3,000 now on the day. If you were to just bring that back into a 1 lot there instead of doing the 100 like I did to the downside there. Now a rotational here in this area, not rotational down in here right now. That means that I can buy one here, looking for a rotation higher. 560 is the maximum risk on this position that I will take. Looking for a possible rotation down here in this area where I'll add another one in case we don't get there. We're much more rotational here than right in here, but I'm still looking for that rotation to come in off of the high. We do have delta in here as well. Now this bar here is going to be important. Come through the open, not a lot of delta there. Back through the open again, not a lot of delta. What happens here at the high? There it goes. And we can go ahead and put 1 limit. We should have already had that in. Put a limit here in case it turns around. There we go. And now we're out of that position, looking for that little spike of rotation. But we have a rejection below us, right? So if we wanted to, we could hold this on to a longer position and look for value area low to be tested again at 422. So you don't have to scalp all the time. You can look for a 422 pop here. Let's see if we get it. Where's 422 at? Right up here. Let's just go ahead and put a line up there and see. Mm, 422. Does 422 here get hit before we break down and get below this low. Now we have the rejection here. Look at the high volume in here, much higher volume from over here, right? And we're coming off and trading back down again, not able to break lows. What is that telling you? Are buyers in control of this market right now, or are sellers? Do I have any questions? And give us a little bit of space. A little bit of space. 310. I'm going to go ahead and lock in 105. I don't like the delta here, and the delta is not shifting as we're getting back through the open, so I want to be kind of aggressive on this, but still give it enough room. Now see how we're holding that volume again? Now we didn't break down and break any lows. Now I'm anticipating buyers to come in and break this high. There they go. If we break this high, expect momentum to come in. Why? Because it probably has some stops up here. Just look for a quick pop, pop, pop. You know, if I didn't know better, I'd almost think I know what I'm talking about sometimes. Any questions, comments, concerns? Y'all are really quiet right now. What I'm trying to show you guys right now in this, don't have to be right. Right? Most traders, when we're trading and we're opening positions, right? It's all about the right and the wrong. And think about when you were a kid, right? And you went in to go do something, and you maybe were just doing it. You weren't really paying attention, and some adult walks around the corner, be like, "What are you doing? Why are you doing it that way?" Right? And it's this, and we tense up and we freeze. Well, as adults, we still do that because that emotional experience is still there with us. And so when we look at positions and like, oh, well, we have to be right or we have to be wrong, right? It emotionalizes our trading so much. And I'm trying to show you guys and your positions as traders, we don't have to focus on being right or wrong. Right? I can enter a position up here long, which is absolutely terrible to do, especially in the context of auction market theory, right? But if I understand auction market theory, I can enter one. If it just goes, beautiful, I'm in. If it doesn't, that's okay. I can scale into my position. I can use inventory to give myself a better price, looking for, just like this case right here. No, not yet. A break-even position. In a position that I was underwater in, right? Now, I messed around up there, so I might not get that target. So I might have to finesse this a little bit more. But it should show you that trading doesn't have to be precise as we place on ourselves, right? Where our entries become so important. And we live and die by our entries themselves. But we don't have to be perfect. We don't have to be right. Because if we're trading the right principles, the right theory, the right context. In other words, if we understand the market for what it is, the market can be very forgiving to us. It's not going to make us be right. But what happens? We need to be right. The market goes against us. So what do we do a lot of times? We panic. And it's not that I trade without emotion. That's not it. I haven't trained myself to trade unemotionally. I still get emotional. You'll hear it in my voice. You'll hear the nervousness in my voice sometimes, right? There'll be a little bit of a hesitation, or a little bit of change in tone. It just happened a few moments ago, because this position here is making me a little bit uncomfortable. I am feeling uncomfortable being short right now or being long in this current market condition, because the market condition right now, the market is telling me that it wants to go down, and yet I'm here still long. And it does. It makes me uncomfortable, right? But the uncomfortability isn't going to cause me to react. And that's where a lot of us get ourselves into trouble, because the uncomfortable nature of our inner being, right? It does cause us to act. But that action isn't aligned to intention. That action is aligned to the automatic processes. And so what's happening now? We're breaking down. Where are we probably going to test in the breaking down? 29,148. And I'm locked into a short. And if I'm in cash, I don't care right now. If I'm in a evaluation account, I'm dead in the water. I just blew up an evaluation, right? So you have to trade within your risk parameters. But don't turn your risk parameters into something that you have to be right about. Because in a cash account, there's my position. And I'm anticipating that it's going to hit 297 before it hits anything lower than that. When do I decide? My psychology is not saying when I trade too much. Okay, yeah. Question: when do you decide, or what do you look for in chart to anticipate having a trending candle? That's an excellent question. And unfortunately, all I can tell you is feel. That comes from the market feel. Market feel. Not feel. Not feel as in like you got filled, right? But feel. It's understanding your market. It's understanding how price behaves in the market that you're trading, and being comfortable enough to be able to predict what could happen with a high enough level of certainty that it becomes statistically relevant in your own trading. Just practice. You have to practice. You have to be here in order to practice. $10.27, and the low broke before we came back up here into this area. But I was anticipating possible rejection out of here and a reversal from this conversation here, and we just didn't get it. At least not yet, right? 7,000 down, $8,000 down. Again, risk tolerance. In a cash, I can take a $25,000, $30,000 hit. And this is why I still haven't figured out how to do a combine yet, or valuation. Combine Top Step. That was the first one that was really out there with any form like that when I was trading. Oh, that's rude. When I was trading. And so your evaluation's out there, right? It changes the rules in the economy a little bit, and I have to adjust my trading around that. But that's just a matter of just making an adjustment. It's not anything that really needs to be really changed. And what's probably going to change is I'm probably going to go into the micros, because the micros are going to be easier for me to manage these drawdowns than I'm going to have periodically, because why take the expense? If you have an idea of where you think the market's going to go, why take the expense? And why do I think it's going to go in that particular area? Well, because we broke out of this area, and breakouts, most of the time, they don't hold. So you should be anticipating a possible reaction to the upside. And now what should you be reacting in here? Really, honestly, you should be buying these lows. Why? Because most breakouts don't hold. So even if we break these lows here, we're probably still going to hold and move higher, because breakouts fail most of the time, because price action trades in ranges much more often than it trends, and to break the lows would be a trend. Can you extend ranges? 100%. We just did. That's what a breakout is really a range extension that could turn into a trend. Just stop expecting the market to move into a trend. I didn't manage this position very well at all. I should have been out with quite a bit more of revenue than $55. $230, $300, we're going to lock in $115. $400, we're going to lock in $200. There we go, another $200. Failure here, beautiful, that's good. Give us a better position to go long. Not far enough down, darn, rude. How rude. And so these highs right here, right? We break these highs up here, especially this high here, anticipate that quick pop of momentum as the highs break. Why? Because price action came down, right? You know you have individuals in here shorted, okay? You know that they're there. You know you got some stops up here. Is this going up because it's a stop run? No. It's going up because we failed rejection at the lows. And so anticipate possible price action pop if we break this high. Now it didn't pop. What does that mean? That any sellers in here are still interested in selling. What does that mean? They're probably holding. If they're holding, it's held inventory. That means we're going to need more inventory on the buy side in order to break these highs. And so if that happens up here at the highs, that's where momentum is going to step in. See if we get it. Just understanding your market and market behavior. No magic. Price action's testing into the high volume again. Buyers are strong. What are they going to do? They're going to come up here and they're going to break the highs again. The buyers are weak. You're going to rotate into the higher area here, right? And get right below. And then you're going to break below the low of your bar, or below the open of the bar, and you're going to rotate and you're going to test the lows. If the buyers are strong, they're not going to let the market test the lows. They're going to hold this area. And what are we seeing in Delta? We're seeing some stronger buyers. There's buyers here at the open of the bar, defending the bar. What happens? Probably not going to break the low. Well, we just did. Beautiful. Move the stop to a break even. See some momentum coming into the market? Beautiful. Just take money out as it goes. There you go. You guys want me to keep doing this particular day? You want me to move on to another day? What do you guys want me to do? Talk to me. I'm going to make you guys respond now. I've talked enough, traded enough on this particular day. I mean, I can still take trades if you want me to, but, you know, what's the point? You guys want me to continue doing this? It's 10:33 in the morning. And you take the $52,000 trade out of the equation, you know, you're still up about $6,000 on the day. 6,005. something like that. I think it was 52,000. It might have been a little bit more than that. I don't know. It's all numbers. It's all relative at that point in time. It's just numbers. It doesn't really matter. What the results at the end of the day, whatever the results are, it doesn't really matter. It's not that big of a deal at the end of the day. The question is, did you trade around your areas? Did you trade around your plan? Did you execute? That's the only thing that we should be concerned with. Because if we can execute and we're not getting the results that we want, what do we need to do? We need to shift our entries. We need to shift the way that we build our plans, right? But once the execution is down, then we can execute anything. So we need to work on the execution first and then build our plan afterwards. Maybe give us some theoretical knowledge on auction market theory if possible. Like, what do you mean by theoretical knowledge? What do you mean? Give me an example. Argentina or Spain, Prath. Oh my goodness. You know what? I just want to see a good game. I mean, Messi is such a professional. You know, he can take over a game in a heartbeat. Spain has a lot of talent. I'm kind of annoyed with France's stance. You know, they have fans that paid good money to be there, you know, to support them, even though they're not in the championship game. And for them to have the performance that they did yesterday in the first half, I think that speaks volume of that particular team. And I'm mainly French Canadian, and I am embarrassed with my heritage. I just want to see a good game. You know, I think Argentina, I think they've got a lot of talent. I think Spain's got a lot of heart. I served in Afghanistan with the Spanish, and I mean, they're not a better group of individuals to serve with. British Marines, the Spanish, phenomenal individuals. So I don't know. I just hope for a good game. But what do you mean by theoretical knowledge of auction market theory? Give me an example. Because it's all theoretical. Every single bit of it's theoretical. It's not a science. It's a pseudoscience. It's like economics. Economics isn't a science either. You know, it's like this position right here. How do you get yourself out of a position that's, you know, you're down $965 or so for? Well, beautiful. I'll show you. It doesn't take a stop, right? You just have to be able to manage the position itself. You got to be able to manage the total risk of the position, which is very difficult to do at 5,000, right? For a risk limit, or 4,500. But see how we're back here in the low volume here? Now we want to buy. Anticipating price action to come back up and break the high. There's your target there's your TP, target profit target. Should be PT, not TP. There you go. Break even trade. Questions? How would you, Prath? What do you think? Argentina or Spain? What does everybody else think? I've never really been into sports. I've always had the mindset of why am I going to sit back and watch other people make a ton of money? Why am I spending my time doing that? Why don't I spend time not doing that and work on things that I want to be doing in my life? And so I understand the entertainment purpose behind it. I get it. And I don't think anybody is wrong for partaking in that. But for me, nah, I've never really been in sports. I've always been a nerd. Argentina. I've always been a nerd. I've never been, I'm not athletic. I have two left feet. I can barely I can barely walk straight, let alone, dance and, play sports or do anything else. I have like a half an inch vertical hop. So yeah, no, my body is not built for athletics. I was a swimmer, you know. People swim because they don't have the they don't have the coordination to do anything else. The water supports you. I mean, Oh, geez, it's funny. So true, though. If your daily bias is bearish suddenly in that session it flips and goes in the opposite direction, do I tilt? No, because I don't really have a bias. No, and the only time I tilt, the only time I actually tilt is when I come in and I just do something really freaking stupid. You've seen me do that a few times in my live, believe it or not. Um, I just come in and I do something stupid. What's an example of something stupid? I'll tell you right now. I short down here. Oh my God. I take a short position down here, like right through here, what it's doing, and holding this area. It really looks like a good short position right now, doesn't it? And when I come in and I take that short position, and the market proves to me how much of an idiot I am because it moves back up into this area, that is what gets me tilted because I do something dumb. Not because of a bias or direction or anything along those lines, because I've been around this game long enough that it doesn't matter what I think, right? It could be news, it could be anything. And I'm like, oh my God, price is going to do this based off of this. And I take the action for it and it does something completely different. And it's like, okay, you know what, whatever. It's just, the market has its own sense of keeping me humbled in that regard, right? But when I do something stupid like this and I take a short position and I know better not to, because I'm like, oh my God, what happens if this trends? And if this trends and I'm not in short, oh my God, I'm going to miss this whole move. Yeah, no, no, I'm going to keep me short right now just to show you because this thing is going to pop. This thing's going to pop up. Watch, look. How do I know it's going to pop up? We're not even breaking these lows in here. And when we do, the buyers immediately are responding. Okay. If we're seeing a trend develop here, price action would already be breaking the lows. One question I always have is on LVNs. LVNs represent thin markets where price often moves rapidly because there is little disagreement. Low volume node above unfair lows doesn't make sense to me. Okay. All right. That's very good. Low volume node above unfair lows. Low volume above unfair lows. So you mean something like this right here doesn't make sense to you? Is that what you mean? Let's blow this up a little bit so you can see it really well. Like this here doesn't make sense to you? Is that what you mean? Okay. No, that doesn't make a lot of sense. Why? Because it's in value. Sometimes the LVNs are deep. Yeah, absolutely. They can be deep. They can be like here, very deep. Absolutely, but it's in value. Okay. So what should we be anticipating? The price action is going to stay rotational in that area. Okay. You don't want to mark and index these very often. The only reason why I have this indexed right here is because it's coming off of a long-term chart. It's coming off of what was going on in the overnights. And so what I was looking at this area was for price action to trade in value around here. And it did right? We came off of here, we came up here, we came back off of here, we came up here, we came back off of here until it started to trend. And so I was looking at trading around that area itself. But then if price action breaks below it, what should we expect? Low volume node to be hit. Where's the low volume node? Down here at 419. And so that was just part of my plan, you know. And why does that plan exist? That plan exists because of the longer term value off of the overnights. And that was actually in unfair lows in the overnights. It wasn't, you know, value area lows shifted down is what happened. Why would value area lows shift down? Because we're starting to develop volume below us. Any other questions? Anybody want me to do another day? I have about 45 minutes that I'm going to be able to be on the stream. My son's going to have some friends come over around 2:30 to watch the game today. And so I'm going to have to, that is like right over on the other side of this that you guys see. That's where they're going to be watching the game, and they're probably going to be pretty loud. I mean, you're going to have a bunch of 17, 18-year-old boys, like 8 of them in the house. Can't keep them quiet. Especially when they all play soccer. Football. What do I think on Monday? Globex open huge gap due to war news. I mean, it's possible. You know, it might not gap at all. It's and really, I don't think the issue is the war right now. I really don't. I don't think that the volatility is coming from that. I think there's a lot of volatility, a lot of uncertainty in the tech industry right now when it comes to AI, the possible AI bubble, and then what is that going to do on chip manufacturers and those type of things. I think we also have a lot going on when it comes to China and Thailand. Not to get into the politics of that, but Thailand makes the majority of the world's semiconductors and processors for computing. Well, if AI is starting to take a dip, what is going to happen when it comes to the companies that support them? And all of them are in the NASDAQ. Well, what are we seeing? We're actually seeing funds coming out of the NASDAQ because how do we know? Because it's dropping. But the other indices are holding much stronger than what the NASDAQ is. So what does that mean? That means that funds are going into the other indices, to the other sectors. So you're losing on the tech sector, but you're gaining on the other side, or you're not losing as much. So I don't know. I don't think that the issues in Iran are going to cause as much global unrest as what we are being led to think that might happen. When something like this happens, right, all the fear and stuff comes out. Well, this is where all the fertilizer, and, you know, if we don't get fertilizer into places, this is going to happen, and that's going to happen, and crops in Australia, and all sorts of issues, right? But here's the thing that people don't realize, all right? When those things happen, what happens is you create an opportunity, okay? An opportunity in terms, especially in this example, like the Strait of Hormuz, I think I pronounced that correctly. When you look at that area, what is the opportunity? logistics. So if the strait's closed, beautiful, that's fine. You run the goods through a different shipping lane. And there's a plethora of opportunity out there for the right logistics company. And you're going to get those. I think all prop firms try to stay profitable, pay Mr. Trump to tweet randomly. It's a possibility, Ram. Prath, AI RAM's phones are getting costly now due to RAM shortage, especially Android phones now almost equivalent to iPhone cost. Yeah. But I mean, here's a question for you, right? How much of that is market driven and how much of that is market manipulation? And so the short, right? I stayed with it, right? We did have a continuation play to the downside, a little bit more aggressive than I was anticipating, right? But we still came back up and broke through that area. We're still holding these lows down here. That's the whole point of this, right? Because both the short and the long are correct. You're trading in value. What makes us incorrect is when we try to manage our positions. And the reason why we over manage our positions is because we don't have the risk tolerance to hold on to particular positions. That's where trading gets hard. And then it's like, well, how do you fix that? Pinpoint better entries, find better areas, change your trading plan all around to manage that. That's up to you as an individual and how you're going to manage that, because that's absolutely real, but it has to be managed. And so now the question is, how do you develop yourself to manage that? Trump candles are bigger than my wick. Well, midnight candles are bigger for me. So, there you go, Prath. Oh my goodness. That's hilarious. All right. Well, since now we're onto dick jokes, which they're not beneath me by any stretch of the imagination. I might be 50, but I'm still a child at heart, and you put me around the right people and I will be on the playground real quick. Any other questions? Any other comments? Any other concerns? Is there anything that I can do to help you develop as a trader that you want to be? Any last words, so to speak? I should probably get out of this position. There's no sense in trying to hold it. Like any other position, what do you do when you're just trying to get out with a break even? It's going to give you more. Take more. It's not about being right. It's not about being wrong. Could the market turn around and break the low? Sure. But do I care? No. And instead of picking up $35, why not pick up 70? I don't know. Maybe I just look at the markets differently than a lot of people, because in that context, it's like, I just don't see any reason to hope and pray. Come on in. Hold on a second. What's up?
You busy?
I'm just streaming. I'm about ready to get done. Why, what's up? What do you got?
Are you live right now?
Yeah. No, you're fine. I'm muted. What's up?
I was just letting you know that there's gonna be a lot of people, not a lot, but like a decent amount of people are coming, like 8
Good.
maybe.
Good.
Or 7.
Yeah.
So, and they're all coming at 2:30.
At 2:30?
Yeah.
Oh,
it's
geez.
2 right now.
Yeah, it is. Okay, beautiful. Well, let me go get everything vacuumed and all that stuff. Thank you for letting me know. I appreciate it.
Yeah.
Okay, so I do need to get going, unfortunately. Who's my mentor for Footprints? So for Footprints, my mentor was a guy named Cam Dedward. He was He's in London. I don't know where he's at. I tried looking him up recently. This was in 2013, 2014. L2ST, I think was his L2ST, I think was his company. I think he created another one, but I wasn't able to find him. He's the one that taught me the auction market theory. He tried to teach me footprints, and I just wasn't open to them. Most of the information that I know of footprints now is just from my own work. Um, I had people try to teach me. I just wasn't an empty enough cup in order to be able to do it. See, higher highs, right? And so what should we be expecting? Price action to come in, do a nice little pullback after breaking these highs right here, right? Possibly maybe even breaking these highs, but a pullback. And where would we be expecting a pullback to come into? Well, probably right here, someplace in this area. So I would be looking for a pullback to come into someplace inside this box. Right in there. Somewhere in there for a pullback. Look for your entries. So, if you're looking for especially with this move that came in with this momentum, right? What we'd be looking for is a pullback down here into this area, possibly breaking this low, testing into this area in here, right? And then looking for resumption of trend. So if you start seeing some pullback into here and some rejection, you can buy into here and then buy into here and buy into here, possibly even put your stop into here, right? And just scale into your position until it, does something where you're willing to start looking for potential profits or something else along those lines. Yeah, my son actually is bringing some having some friends over, so I'm gonna be entertaining a bunch of teenage boys. Be good times. Be good times. Well, thank you, Ram. I appreciate that. I will definitely. My wife is in Florida right now, spending some time with her friends and those type of things, just having a ladies vacation. So hopefully she comes back all kinds of refreshed and all that stuff. And then her daughter is see, here's the pullback, right? So I'm looking for places to enter, and I should have already been entered with one or two. I was looking for maybe a little bit deeper to come in, but see, your pullback up, 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 up. No lower lows yet, right? But there's your pullback right to your area, and then your entry someplace down in here, right? And now you're moving higher. Look for price action to come up and test into these highs. Here's your high volume, right? So look for price action to be rotational in this area now. Manage your position properly within the context of your rotation. And we break here, momentum is expected. Unfortunately, here in India, matches start late midnight. My sleep cycle is affected. Yeah, absolutely. No, most definitely. But you know what though? At the same time, right? When other games are in other areas and stuff, the US is affected the same way. That's why every 4 years it's someplace different, except for next year, it's going to be, or 4 years from now, it's going to be what, like 6 different countries and 3 different continents? I mean, that's going to be really difficult to follow. 12:30 a.m. match starts there. Yeah, that sucks. That doesn't sound like any fun. Yeah, it's only 3 p.m. for us, so much, much, much better. On that note, it's 1:59. Thank you guys so much for being here. I truly appreciate each and every single one of you. Thank you for your questions. Thank you for your input, for giving me the day here to run. I do. I truly appreciate each and every single one of you. If you have questions, I got a Discord. Join Discord. Link. Type in !Discord, and that will get you that for my TikTok friends. Let me get you the link real quick in case you are interested. Discord's going to give you just a place where you can put in charts and, talk to one another, join a community, and just, it's all part of trading, and each and everybody's doing a little bit different, something a little bit different in each market, and, just share your perspectives. Hey Prath, anytime. Thank you, Daddy. You are so welcome, son. Um, um, it's all about finding what works for you and allowing yourself to execute around it. Stop trying to be right all the time. Stop thinking that there's a problem with you or your trading, because there's not. Thank you, Online Forex, for following and for the like. I really do appreciate you and your support in this. Trading is a process, and it takes time. It takes some people more time than others. Don't judge yourself so harshly. Be kind to yourself. Be patient with yourself. Be loving to yourself. Let that drive new results. Appreciate each and every single one of you. As always, until next time, be safe, be kind, and know that you too are loved, as I love you. Thank you so much, everybody. Enjoy.